Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Today's episode is brought to you by Chris Lyle State Farm. Chris Lyle State Farm helps you protect your most precious assets and investments, whether it's your home and auto, investment rental properties, or other valuables. Call Chris Lyle State Farm for a quick and painless phone call to potentially save you double digits on all of your insurance needs. His phone number is 918-878-7771, or visit diallyle.com. That's diallile.com. Tell him Matt over at Keyrenter sent you. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we offer a full-service property management suite of services, helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Today's guest is Michael Drew. He's the CEO of Real Estate Done For You, the number 4, the letter U. RealEstateDoneForYou.com has helped hundreds of investors worldwide achieve their retirement goals through strategic investments in real estate, in rental real estate specifically. They utilize cash, IRAs, mortgages, and 1031 exchanges to get those deals done. With a robust portfolio, including over 500 real estate transactions and extensive stock option expertise, Michael focuses on developing sustainable passive income strategies. And as he says, and you'll hear him say it today, don't wait to buy real estate and wait. Michael Drew, welcome to the show.
Thanks, Matt. Good to see you.
So tell me, Real Estate Done For You.
Yes, sir.
Is turnkey investor properties.
You got it.
Tell us a little bit about how it actually works. If you're an investor, and you're looking for a property, just hit me with the sales pitch. How does it actually work on the front end? And I got a ton of questions.
I'm going to go forward by going back.
Good.
If you don't mind. I was a professional speaker for years, and all I really knew how to do was the stock market.
Yep.
And I'd make a bunch of money, sometimes lose a bunch of money. There was no residual. There was no way for me to replace my W-2.
Yeah.
And I'm just, and then I remember when it was like my dad teaching me how to parallel park a car. Then you do it a couple hundred times. You're like, it's not that hard to parallel park a car. Okay.
Yes.
So then I bought my first 2 houses, which then grew to 9 houses. And I'm like, oh, this is great. This is not that hard. Now that said, I did them all with my current business partner in Indianapolis. They were all simple. They were all, 1,200, 1,400 square feet, boring. And all of a sudden I'm like, wait a second, my gross rent's here. My, expenses, my mortgage payments here, my tenant's paying off my mortgage. I need more of these things.
Yeah.
And so that grew, that grew and grew and grew to now we have well over 1,000 doors. So that's my background. Moving forward is we're basically for investors by investors. So yes, we do property management, of course, but it's more of an added service. Yeah. We're mainly here for people in my Rolodex and my database to help them make passive income. So the answer to your question is we buy about 100 homes a year, give or take. Okay. Sometimes 80, sometimes my biggest year was close to 200. We go ahead and our internal staff does all the rehab. And I know, I've been doing this 15 years, so I know what to do, what not to do. We can't just put, as they say, air quotes, lipstick on a pig. Mm-hmm. You've got to do a good job, because my secret game plan is my investors will come back and buy more. Mm-hmm. So you do a good job. You do the roof and HVAC and water heater and upgrade plumbing, electrical, yada, yada. You do everything. And then we put it to our leasing department and we lease it out to our investors. So literally someone can raise their hand, whether they're a cash investor, an IRA investor, or a DCSR loan, a no-doc loan investor. And they can say, hey, I need, $4,000 a month in passive income or whatever, and I find the homes, whether it's a 1031 exchange or whatever it may be. So that's the story. And it's been working very, very well.
And so how does it work? Do you have a preferred insurance broker? Do you have a preferred lender? Do you just kind of, is it all turnkey? Literally just plug my name in and it's like, boom, boom. I get a call from the insurance guy. The insurance guy says your quote's going to be this. You get a call from a DSCR lender. That's like, I got to make sure your debt to income, or I got to make sure that the DSCR on the house is 1.25. That's it.
Yep. Now again, I'll match your pace. I'm from Chicago. I talk fast. I'm sorry, but some people be like, well, wait a second here. I really want you to help me and teach me, why did the 12-year-old water heater break? Well, that's usually the useful life of a water heater, and that's on the high side.
Yeah.
Well, some people really want to learn, and other people, like I have an investor out of Naperville, Illinois. He bought 7 houses and he was like, just keep sending me money. That's fine.
Yeah.
And I can't spend a lot on maintenance. I can only, as a property management company, I can only spend so much on maintenance before I have to give you a call and say, hey, something really broke. But if it's a snake in a drain or clearing gutters, or something like that, it's no problem. I go with State Farm to answer your question. And that's one of the reasons why I chose Indianapolis is my mentor. I used to teach for Rich Dad seminars. If you ever heard of that book, and he's like, you got to go to a major city. You got to go where there's no insurance risk. So I can't go to Texas or I can't go to Florida. I have to have low property taxes. So I can't go to Nevada, Florida, things like that have no state tax. So the property tax is higher. So when you do all the work, you find these smaller little cute little B markets, if you will, not in New York, LA, like these, like you're in Tulsa, that's fine. Those little markets that works really well for.
So 2 things. One, we have tremendous insurance risk here. We've got tornadoes and hail and a bunch of other stuff, which is problematic. Numbers still work, generally speaking. Post-COVID's been a little bit hard, but we can talk about that afterwards in our future business endeavors together. I do want to ask, what's the point at which you change out the branch lines of a plumbing system? Like when do you take clay and put in a 4-inch PVC line or a 6-inch PVC line? Like how does that work when you're doing the rehab of a property to make sure it's obviously a balance? The more you put in, the more you have to charge for the house. You're not necessarily going to get more rent for having a brand new plumbing line.
Correct.
But you don't want to do too much so that the price can stay low and the return is right. But if your pro forma return, meaning I'm going to get $1,400 for a $165,000 house, doesn't actually look that way because 6 months down the line, I'm doing a $4,000 plumbing line. Then all of a sudden it looks, you've got egg on your face and investors say this wasn't as you expected or as you sold it.
Correct.
So like, what's the balance? How do you actually know when to do what?
So we have a standard that we follow, now I'm cammering and snaking every drain, and if it flows, it flows, now that said, if there's, 16 trees in the front yard, we got to take a look at that again. Right.
Yeah.
That is a twice a year thing I do as far as main drains and things, right? Proactively, we may be putting in at least a clean out. Okay. Yeah. We're removing all galvanized up to the main to answer your questions. Yeah. And then everything on the inside of the house is PEX.
Got it. I mean, so you're gutting walls sometimes. I mean, you're cutting in holes if you have to, and you're changing out all the plumbing.
Yeah. I mean, you didn't get a cold. Well, I think there was snowing in Dallas this year or something like that.
Yeah, we got
like a cold snap, right? And we got down cold, and even, so that's not fun when you're calling and, you can't, flush the toilet because it's frozen. Right. So we do everything to the industry standard, me personally, of my personal holdings, I don't go around replacing roofs because I want to set money on fire. Yeah. But if I have a new investor and our standard is the roof has to at least have 10 years of useful life left on it by the inspection. Well, if the inspector says, well, it's probably got 5, it's not in the best interest of the investor. Now, if it was mine, I'd leave it. Okay. Yeah, but the investors, California or wherever your clients are at, I'm going to put a new roof on. And once I've done this a few hundred times, I know my acquisition. I know what it's worth. Sure. I know whatever. Maybe I make a little bit more, a little bit less on a property, but my top investor has 88 houses out of Malibu, California. Yeah. And after he trusted me with the first 10 or 20, he's like, give me another 10. A wealthier gentleman, of course. Right. Yeah. But still, it works great.
Do you find that those people with a lot of money are still putting debt on the houses, at least a little bit?
Usually not.
They paying them cash, really?
Usually not. So my coastal properties, like my New Hampshire, I have a big thing there, and then I'm speaking in LA later on this month. They use me for 1031 exchanges.
Got it.
Okay. So they'll say, hey, I bought that. Like some of your clients might say, hey, I bought the house for using round numbers, right? 120 grand. Now it's worth 300. Don't pay taxes on it. Just parlay that. Keep parlaying that. Sure. And then I'll give you 50% debt, and we'll parlay that to 7 doors if you want.
Yeah, that becomes a function of how much debt they had on the initial investment and what they have to replicate. But yeah, that
correct.
That tracks. One thing I've noticed recently is that some of our investors are experiencing what I know as recency bias. They're thrilled with the rents and the run up of rents, I should say, on the existing lease properties for anyone that got into investing, in 2022 and before. Right. So they bought properties for 75 grand. They were getting $800,000, $900,000 a month in rent. And now they're getting much more. But for people that bought in 2022, expecting that run up in rent to continue, and it hasn't, they pro forma that number in, and they're like now potentially disappointed with the rents that they're getting, the ratio of rent to the asset value. What do you say to these people when like what they thought was going to happen just hasn't happened? None of us have a crystal ball.
Right.
What do you say to them?
That's an interesting question. My training taught me, it's kind of, you trust but verify. You've heard, measure twice, cut once, that type of thing. Rich Dad always said, you pro forma cash flow, okay, and then you hope for appreciation type thing. Okay, I can go ahead and I can look at my spreadsheets and I can tell you that it's going to rent for X. I already have a 2-year lease signed, and if they bounce for whatever reason, I know I can replace that. So as it stands today, you're good to go, buddy. Your cap rate's good, and your internal rate of return's good. Okay. Now that said, I don't like to do that when you're like, hey, it's 10% rent goes up every year, because I don't know that. So what I like to have happen is I prefer under promise over deliver when they come back to you in 2 years and be like, I got 75 grand of equity or something, whatever it is. It's more than they thought. Sure. That's better for me. So I would always say under promise over deliver. And also is, like I said to you before, you and I have been successful, but it's only the real reason is because I've screwed up a lot. Sure. I've just tried more stuff than you have. Sure. I've just failed more. I'm walking into houses and there's a free swimming pool in the basement. Oh, yay for me. Like you do this enough. You're like, I've just screwed up a lot. That's why I deserve to talk to you and say, it's not all sunshines and roses. Yeah. Yes, you have a lease, but if their mom has cancer in Seattle and they bounce on you, it is what it is. We're gonna turn it as fast as possible. We're gonna take care of you. It's just they're human beings. And
to your point, what's the famous thing that you say? Don't wait to buy real estate. Now, what do you say?
Don't wait to buy real estate and wait.
Exactly.
So no one same thing. It's kind of like we both have 4 kids, right? No one, and so my goal was to spend time with my kids, but stupid me, they all have different love languages. Like my son and I are like, it's easy. My boy is easy. My girls want to talk. It's hard, So why I say that is you just plan it out. And meaning is when you're older and you have 10 or 20 properties or 50 properties, you're not going to regret it.
Sure.
Every now and again, you're going to have down years or high maintenance years, right? But all of a sudden, when everything doubles in value and you're sitting there at the end of your life, you're saying, wait a second here. We never have to worry about anything. Yeah. We can live another 20 years and not even hit your 401k, honey. I mean, it's cool.
Buy real estate and wait. We have a lot of people that are still selling though, because they feel like, again, to the recency bias, they had a bad year of maintenance. They had, HVAC prices have gone up and they waited. I told them 5 years ago they should replace the HVAC, and they wanted to Band-Aid it and solder some copper lines and whatever else, patch it. And now they realize that a new HVAC system is $7,000 to $10,000. Like, we should have done it before. Well, they've spent that money and now they feel like, you know what, I want to sell this thing. It's not producing as much cash as I wanted. And my perspective is just wait. If you look at the numbers, if you actually take your pro forma, match it to what your reality's been, now you'll see that your return, including depreciation, including your principal pay down, including the cash flow, is all great. And I had a friend, a business partner of mine, that was like, hey, get rid of these properties. We have not made any money. And I went through and I did the exercise. We bought them in 2019, December. We did the renovation in 2020. And now we just sold 2 of the 3 duplexes that we own. We're like in them for $40,000 cash total after renovation. We sold 140. So we're in for 280 and we still have 1 left. I looked at the IRR. It's like, and I assumed that I assumed a price for the last sale. So I assumed a total exit. It's like, I don't know, 110%. I looked at the cash on cash return, 540% or something.
In 6 years.
In 6 years. It's in 5. Yeah. And I'm like, it's dumb. I mean, sure, we can sell these things. We can exchange them into something else. But frankly, I don't know where you're going to get a better return than this. Right. So even though we had some tough years of maintenance, like we did the renovation, but we had issues with HVAC. We had issues with the plumbing lines that we didn't check. Like, it's still, that's a phenomenal return.
Phenomenal.
So people have recency bias, and I'd like to find a spreadsheet and work it with every single person so that I can say to them, where are you getting a better return than this?
Right. What I like to do is sit down with someone, and it's you and I like to do some sports. I do a lot of pickleball. I do lift weights with the wife, and I was a triathlon person, played rugby. So I like to sit down with someone and say, what's the point? What are you doing here? What do you want to accomplish? Because like, I like to play pickleball. So somebody's like, no, I like to run. I'm like, I only like to or someone likes to swim, I can only swim back from the diving board. That's it. That's it. You know? And so like I sat down with one gal and she's like, I'm 50. I've got great credit, got divorced, and I want 10 grand a month after expenses. And literally getting wealthy in this business to me is more of a math problem.
Sure.
Give me your temperament.
Sure.
Here's my tools, which is my real estate. And we figured out, and my numbers are not exact, but we figured out that her deposits, her down payments had to be 33 to 35% in order to make the model work in the time she had.
Sure. Sure.
And now you and I have been doing this long enough. She's done. She's done. Everything was in line. And then she refers me business all the time. So doing this, if you have that, I encourage people to have that longer term mindset, whether it's building relationships with your kids or buying real estate. If you're in it for 5 years,
absolutely.
It's,
I see people that buy stuff. It goes up 20 grand. They sell it. I'm like, cool. You made 20 grand. And now you got to figure out what to do with that. Like what? Yeah. And you're giving the government half, and you got to figure out what to do with that now. Like, why would you do that? Buy and hold the real estate. But I have a couple of questions. One is what's in your experience over the last 15 years, what is the expected cash flow? If somebody goes to Real Estate Done For You and they buy a house, there's a thing on here that says properties, a tab that says properties. They go on, they want to buy it. What's the expected conservative cash flow they can expect per house per month? Sure.
Our cap rates on there are estimated, because we do not guarantee anything, 8 to 9%.
Great. So they put down $35,000. They're going to buy a $170,000 house, and they would expect call it 10% of the asset value. They'd expect $17,000 less a couple of points, whatever I just said, 9%. They're going to expect that much in cash flow. I mean, it's a pretty significant return and a great market. I mean, in Indianapolis, where you're doing your investment,
correct.
Turnkey rentals is a great market. Capital, capital of the state.
They call it like a perennial market where so within 660 miles, I think, is 2/3 of the American population. You can have breakfast in Indy, go to Chicago for dinner. Okay. If you leave early enough, you can go to breakfast in Indy and catch a Broadway show. I can go visit, I don't know about you in Tulsa, but I can go to Nashville. I can go to Atlanta. Yeah. So it's within a day's drive of most of America. Okay. And then we have we have the Pacers, we have the Colts, we have the farm team to the Cleveland, and it's easy. Yeah. It's
crazy that it's 2.5 million people in the MSA. It's I guess 2.5 times the size of Tulsa MSA. So it's bigger. It's not so massively bigger. And yet there's so many more sporting options. There's so many more things to do. Pretty amazing little inflection point that must happen. Part of it's driven by the state capital, part of it by other stuff. But let me ask you this. What do you say to people that have looked at tens or maybe hundreds of deals and I've never pulled the trigger? Like, how do you get them over the analysis paralysis?
That's a great question. First of all, it's kind of like my son's trying to, think about buying a ring for his girlfriend and he's getting nervous. Right. And I go, you never 1000% know anything in life, like you're like, well, there's divorce in our life. So what happens, Dad? I said, so you got to sit down and talk to him. If you're really analyzing, really more than 10 or 20 deals, at some point, we used to say this in the coaching business. We'll give you, if you don't like your coach, we'll give you 2 chances to switch. Then we'll give you a mirror because chances are it's your fault. Yeah. Chances are you're hard to work with.
Yeah.
So in real estate is on a 1,400 square foot home. Guess what? It's got 4 walls. It probably has a kitchen and a bath. It's in the city. The point isn't the house if it's green, yellow, or red or gray. The point is the system behind it and the team behind it.
Yeah.
So that's so if you're gonna be like, well, I wouldn't live there. You're like, we're selling Toyota Camrys. We're doing an Uber business.
You don't have to live there.
It's not your dream job there, buddy. It's not a Mercedes or a BMW because those are bad Ubers. We want an inexpensive car with good gas mileage, and that's the job. It's not a dream car. It's not a dream house. It's one that's meant to be a workhorse. That's the point.
Is there an infinite supply of these houses? Obviously, infinite.
No, it's getting harder and harder.
Is it?
It is. I mean, we used to be able to buy them. Our margins were a lot higher 10 years ago. And so now, thank God, we've been doing it as long as we have. So we have like 7 different acquisition sources. And people are like, well, I went to a seminar, I read a book, I want to do it myself. And I'm like, good luck, man. By the time it makes it to the MLS, me and 15 other buddies have already looked through it and decided that this is not going to work for us. So we have, and the only way to buy from the sources we buy is cash. There's no hard money. I mean,
Yeah.
I guess you can do hard money, but I mean, we got to go now. I mean, I can wire earnest money from my laptop that I carry with me on the pickleball court, just in case I need to do it now. So we've got to move on these deals.
Don't sleep on them.
Months to buy from a tax lien to a probate sale deal, but once we get them.
How long are you sitting on a property generally from the time you acquire it to the time you flip it?
Right.
Turnkey?
Not that long. Not that long. My business partner has got to kind of reinvigorated. We solved some things in life and we're kind of put our hat backwards, kind of ready to get to work again.
Yeah.
So, at any given time, we have, 10 or 20 homes and it's been working very, very well. So, 90 days,
and
like
your
that.
team, your internal team, W2 guys are doing the tile work, the floor, polyurethane sanding, the painting, everything
on purpose.
And the houses sorry.
I just struggle to quality control unless it is that. I think we outsource our HVAC. That's about it. So everything's in-house on purpose. Also, we're in that old Midwest pride thing, So if it's not right, I call up Angel. I go, brother, you told me it was done. It's not done. Well, it's 6:00. Angel, don't care. You told me it was done. So don't cash your check until you go back over and finish. That type of thing. I'm trying to be funny, but you got to take pride in the product you deliver. And I can't do that to a contractor. I can do it to some internal staff.
And everything's relatively the same. You're using agreeable gray on all the walls, white trim. It's the same product. Now you're going to use different color Formica or whatever on the countertops. Some of it you're going to salvage, some of it you're going to reduce. Sometimes you're going to paint cabinets, sometimes you're not. But generally, it's the same product. And that means on the investment on the management side, you always have guys that have a gallon of whatever color paint. They can go back and touch
gray.
it up.
All the lock sets are the same. All the toilets are the same. The wax rings are the same. Yep, you got it. So that's how we could scale management.
Great product. Yeah.
That's how we could scale management. Yeah.
Beautiful.
So that's one of the reasons people are like, well, why don't you come here, there, or whatever? And I'm like, and then also as you get a little bit older is I want to make as much money as possible. But I also do love my wife and I do love my kids and I don't want to work 12 hours a day. And so I teach my tenants that as well. I said, pay through the app. And that's how you request maintenance. Don't call me again. I mean, I don't say it like that. Yeah. I said, I can't scale like that if you call me. Okay.
Yeah.
Go through the app. We have staff on the app. Okay. And then staff can send out the drain guy or the HVAC guy. I'm trying to, build my relationship with my kids or win a pickleball tournament.
Most likely the latter.
You're not wrong. You're not wrong as they get older.
We do the same thing. Like tenants want to call us and do it. And I say, look, we are not all available 24/7, but we have 24/7 response. So if you send it through the app, then it doesn't matter whether so-and-so's on paternity leave, maternity leave, whether so-and-so's on vacation in Mexico, somebody will address your concern. But if you're texting your property manager directly, they might not answer you for 2 days. That's not we don't want that to happen. And you don't want that to happen. So do it through the right systems and then we'll get it sorted immediately.
Right.
Any challenges on the property management side that you still like to address, correct, things that you're improving? We're both in that business. I didn't wake up, at 7 years old and say, I want to be a property manager. Nobody does. You got it through. You came through it. Exactly. You came through it, as a necessary evil. I've come through it as, also fundamentally the same way. I owned a bunch of rental properties and I was like, I want a team that will be able to rehab these properties, get them up and running and do it fast. And so I came about it that way too, more or less accidentally. What are you still working on the property management side that you wish functioned better?
Right. I think I made a final tweak on my late fee policy. I went with a property management software that I promote that reports to the credit bureaus so that they can report their on-time payments to the credit bureaus. I've kind of chosen a unique personality because I authentically love people. Yeah. But I can't be your dad. I can't be the dad to everybody. I can't, so that's kind of my thing that I want to tweak a little bit. I have my daughter doing some property management as well. She's doing some of the grunt work of verifying employment and previous landlord history, things like that. But what I do like is that I'm in a Midwest city so that every home I have a dozen applicants. So I have so many applicants that it's, I don't want to say cocky. That's the wrong word, but I can be a little bit arrogant saying, I told you that you have to net 3 times rent. Well, I know, but John referred me. Is John going to pay the rest of your rent? So no, we got to go by our systems. Yeah. And so once people really understand that we have systems and processes, it's a lot easier. And I got to say, over the last 15 years, software has tripled and quadrupled in effectiveness and efficacy. So I've been really grateful for that because I can send group messages out, scheduled messages out. I can, if you haven't take a picture of your furnace filter, you haven't changed it, blah, all these different things to remain proactive.
What software?
Like I
What
said,
software are you using now?
Buildium, and I like it.
Love it.
How about you?
We use Appfolio. Same.
Yeah.
I think they kind of all do the same thing. It just depends on what you get used to and what your team is working on.
Right.
Right.
It's kind of.
What was the most painful process that you did 15 years ago that now has been solved by technology?
I would say lease signings. Really, it would take us almost an hour to sign a lease. We also are a bilingual company. I know a lot of Spanglish, but we have staff that's bilingual, and they would come on in, and all of a sudden it was like I'm in Miami, as a snowbird, so I can get myself along.
Sure.
I can get directions. I can order food, but I don't really quite understand TV yet.
Yeah.
So someone who doesn't understand English I really want them to understand the lease, so I can't get through that. I need them to understand.
Sure.
So that was something, but an hour to do it, so now we literally do some Zoom calls with people. Then we have another staff member walk through the house for their pre-lease up, check off things that may or may not be wrong, so, but what I really do enjoy is this. Everyone has a smartphone. Everyone has $1,000 phone in their pocket, so if they have a problem, they can take a picture of it and send it to us.
Yeah.
So I really do enjoy that. I really do.
15 years ago, you take out your Elf One Pro first gen digital
your Razor,
camera.
your flip phone, maybe.
My God,
are we dating ourselves? Right.
Anything else? So let's talk a little bit about real estate done for you. How do people reach you? How do they find a house they want to buy if they've got a little bit of cash? And then just want to clarify, I've got $30,000 in my bank account. It's burning a hole in my pocket. I want to get it done. You'll kind of do everything else. They're ready. They understand, get the value proposition of real estate. They love depreciation.
Let's go.
You're going to do everything else. What do they do next? How do they find you?
So the name of my company is Real Estate Done, and then the number 4 and the letter U. I trust you'll put that in the show notes or comments, however you do that. You're a fancy podcast guy. And the next step is to book a strategy session with me. Just you get my little link and then we talk. That's it.
Cool.
Leave your checkbook at home at that point. Be like, what's the point? What are you going for? What do you need to accomplish? If you're ready to go, like you said, because you and I have done this a lot and they're like, I get it. I'm too busy. I've already looked at 20 deals. If I look at another 20, they're going to be about the same. I go, okay, now we're talking. So, let's take action, right? Dogs don't bark at parked cars, I used to say. So let's go, let's move it. Yeah. And so really, and then I'll say, all right, I've got, I want to start with 1, or I want to start with 5, or whatever your number is. Okay. I'm going to go ahead and either send you pro formas on those, or I'm going to give you my top 3 or 4. Okay. These are why I like these top 3 or 4 on our next call. But one, yada, yada, yada. We already have the loan officer that I work with, who's very flexible and can understand self-employment all the way to whatever financial gymnastics you have, estate planning stuff. Everything. We have everything. Okay. So by the time we're done, you're going to have to put in $1,000 earnest money. You're going to save your down payment for the title company later. When we close in about 4 weeks, you're going to go ahead and make sure you give me your ACH information. That's all we do. We don't send checks unless it's an IRA company. We send checks to IRA companies and then go from there. Rinse and repeat. Also, I will say is I noticed that I was sending about 30% of my checks or my direct deposits to self-directed IRA companies. Sure. So I work with 1 or 2 in particular that are great. And that money you can use that money, by the way. You can own assets in your self-directed IRA. So I'm sure, Matt, you send checks to a bunch of them, right?
Sure.
And it's been great. And that's what I do with my mom.
Can you lever up from a self-directed IRA?
Yes, you can. It'll be called a non-recourse loan. If you do lever up in an IRA, there's something called UBIT, which is unrelated business income tax, because you've levered up an asset that's a unique tax. It has tax advantages. So if you lever it, there's a tax to that. And I can walk you through that.
Got it.
Kind of cool, right?
Beautiful. If somebody wants to reach out to you directly, you suggest that they just go to Real Estate Done for with the number 4.
The number 4 and the letter U.
The letter U, and just go to contact us and reach out that way.
Reach out that way. Put me and or shoot me a text. You can put my cell phone down there, type thing. It's real easy because here's the deal. It reminds me of this. I do enjoy dining with my wife and my friends. That's a fun experience for me. And I remember I went to a very, very nice place, and I think mine was medium rare, I think. And it was just still bleeding. It was still moving. And I just went to the guy and I was like, hey, I just need a little bit more heat on this. I don't think he had malicious intentions. It just came out too rare just to help me out. And the guy came out and it was done in whatever it was, less than 4 or 5 minutes. And he wanted to buy my dessert or something. And when you're dealing with an experience like that, which I love for my friends and my family, or money, it can be emotional.
Sure.
That's why I appreciate talking with people. So,
Yeah.
Because you'll talk more at the beginning. And then every now and again, I'm going to send you thousands of dollars. And then every now and again, there's going to be a maintenance request. And besides that, you got to call me and add to your portfolio unless I reach out to you.
Yeah.
So I do appreciate the relationships. And also, you and I both work for ourselves. And, so I do enjoy that. When I travel, I'm going to LA in a couple of weeks. I get a chance to visit my investors out there. I'm going to drive through Nashville. Somebody says they're better than me at pickleball. So, friendly wager. Or I did see a Super Bowl ad, maybe Mick Ultra. Maybe we'll bet that. I don't know. Let's be crazy. So we got to have fun.
I love it. Michael Drew, as the CEO of Real Estate Done For You. Again, that's for the number 4 and the letter U. Michael Drew has helped hundreds of investors worldwide achieve their retirement goals through strategic investments in real estate, in rental real estate. He utilizes cash, IRAs, mortgages, and 1031 exchanges to get those deals done. With a robust portfolio, including over 500 real estate transactions and extensive stock option expertise, which we didn't even cover here. I want to know more about that on our next podcast. Michael focuses on developing sustainable passive income strategies. His journey into real estate investment was driven by a critical insight that traditional savings and retirement accounts often fail to deliver the necessary growth to secure financial futures. And then after purchasing his first few homes, he recognized that the unparalleled benefits of real estate investments, as have I should say. Just a little caveat there. As Michael often says, and as he said here, don't wait to buy real estate, buy real estate and wait. I couldn't agree more. Michael, thank you for being on the show. We really appreciate you.
Thank you, Matt. We'll talk to you soon, my man.
Take care.
All right.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.